somehow. There
Thank you,
must have
Mike.
been a glitch in the matrix.
Oh, well, hopefully that's the last glitch in the matrix. If you're wondering why aren't you live on Facebook, well, we are now. That's Florida Talk Real Estate on Facebook. Good morning to Ross Komarinetz with Brightway Insurance, Juno Beach. How are you, Ross?
That's right. Good to see everybody. Happy Saturday. One of the last Saturdays of summer, right? Or at least vacate for summer break.
Yeah,
Our kids, they go back to school the 10th, so Wednesday. For some reason they're starting school on a Wednesday. Not sure how they make that happen, but
I'm taking my daughter to she's starting the 3-year-old program on Monday.
That's gonna be is that VPK already?
Or 3-year-old program, not quite the VPK. We're
I gotcha.
Like maybe
it's voluntary pre kindergarten.
Something.
VPPK.
How many? Yeah, we'll sort through that for sure. It's exciting time for parents because they're like, hey, finally, we don't have to worry about what they're doing all day. We know where they're going to be. But yeah, we're definitely into the last weekend for many who are going back to school very soon. Let's say good morning to Jarrett Perry, who's joining us on this Saturday. Not only has he been dubbed the CPA of the Stars by Sports Illustrated like several times, but he's a CPA to everybody that matters in my world for sure. That's Perry Group CPA, and he's rocking the PPF on his chest, ladies and gentlemen. Players Performance First. Jarrett Perry, how are you, my friend?
I'm doing great, Johnny. It's always good to start a Saturday off with all you guys, man. It brings a smile to my face. I'm happy to be
talking about. It's great to see you.
Got good vibes this morning. Let's keep it going.
Oh yeah, nice.
I should have worn my PPF, right? PPF shirt.
Did we send them to you, right?
Yeah, I'm saying I received the package in the mail. And I was like, holy cow, look at this.
I got no confirmation. It's all good.
Well, here it is. That's the official thank you. I'm sorry, Jared.
It was.
I'd rather be on the air anyways, Mike. Thank you.
It was a nice thought that you should have put it on, Mike. And as you said it, I was like, yeah, I should have put mine on too, for sure. Thank you, Jared, for getting to some random reach out like 2 weeks ago. Hey, what size shirt do you wear? Got to send you a PPF.
It's like 3 weeks after we talked about it too.
Hey, it happened. That's what matters.
Someday it just came to my head, and I was like, man, I needed to send these guys shirts. So.
I love it. Thank you for thinking of us. Yeah, and let's say good morning to my guy, Jimmy D. Y'all, I've told you for over 10 years now that Jim DePola runs a top-producing Keller Williams team. At Keller Williams Innovations, you will find the Florida Home Pros team. That's the team I'm referring to. Jimmy D, how you be?
Hey, guys. Good morning. Can everybody hear me okay?
Hear you good.
Awesome. I forgot my microphone today, so I'm going headphoneless and microphoneless, so we'll see how it goes. Good morning, everybody. We have a really interesting show because not just because all of you guys are interesting, which you are, but also because a lot of interesting stuff's happening in the real estate world right now. Oh, my gosh, right? So we're going to be talking today about mortgage rates, and they're going up and they're going down and they're going up. And remember, I've been saying it's like choppy waters. We're sailing away on choppy waters right now. So we're going to be talking a little bit about that and, stories about whether, and thoughts about, is it a good time to buy? We're going to talk about that. And, a lot of people are looking at different things. And this weekend was no different than the last 5 weeks. We've going up and going down again. So we're going to get into that. We're also going to talk with Ross about insurance. Oh, my God. Insurance is like almost anything you could talk about insurance when it comes to properties is happening right now. We have condo insurance issues. We have homeowners insurance issues just for like regular single family homes and townhomes and things like that. We have insurance of insurance companies issues, which is called reinsurance. So we're going so deep that even the companies that insure insurance companies are having problems or creating problems. So all this stuff is going on, and it's really hard to figure out what's going on. Plus, I found out a little interesting tidbit from my cousin a couple of days ago. Talked to Ross about it this morning, and just asked a simple question: what would happen if the state of Florida didn't have enough money to cover all the insurance policies that they're floating right now, right? That they're insuring right now or backing? And the answer is quite surprising. Pretty much everybody's going to be on the hook. And it would be.
But that doesn't just apply to if Florida runs out of money. That's if you're every single company.
So if Florida was the reinsurance company and they had we're going to get into it, right? I promise we're going to get into it. Then the other thing we're going to talk about with Jarrett here, and I think this is really interesting because we hear this stuff all the time, is capital gains when you're doing an investment property. And is there a difference in how do you calculate capital gains for like a buy and hold, like a rental property or an Airbnb or something like that, versus a fix and flip? You buy the house, you fix it up, and 4 months later, boom, you're selling it again. There's big difference in tax implications on that, right, Jarrett?
Yeah, absolutely. Most people have no idea until after the fact. So I think it'd be good if we can get them some proactive information so they know what to expect in those situations.
Great. And then we also have a question you don't know about. Okay, so the question is and we're going to get into it later. The question is one of our customers is selling a house that was related to an estate sale, if you will. Okay, now the house is being sold. There's a lot of money, a decent amount of money being made, and he's just wondering what his tax obligation is going to be.
I think I'm going to have some good news. I think that one I'm going to have some really good news for. So Jason is one of our great customers. He's a big fan of the show, and he lives in Georgia. So he wanted me to ask the question because he's on the road all the time. So hopefully Jason will be listening today, and later on we're going to get to that also. And that is going to be enough for this week. That's going to be a chock full of 2 hours of stuff to talk about. But man, let's talk a little bit, Johnny, at the beginning, though. Let's just talk a little bit about the economy stuff. You and I have been trading back some news stories that we've been seeing in, over the last week or so, 10 days. And, one of the things that came out was, I think it was yesterday, or the day before yesterday, it was the jobs report, right? So the jobs report came in super strong, 528,000 jobs created. According to the statistics, supposedly we hit the same employment number that we had in February 2020, which is what they consider the last month before full on COVID shutdown.
Right.
And so we're back to where we were right before COVID employment wise. And unfortunately, and I don't say this facetiously, but unfortunately, the unemployment rate actually went down a little bit. I think we went down from 3.6% to 3.5%. That's actually not a good thing. And that tells everybody that while we're seeing prices still continue to go super high and inflation is still very, very strong, the jobs market is not being hurt right now, and employers are still hiring. So even though that everybody says we're in a really bad economy right now, the employers are still hiring. So, what that means, I don't know yet. I mean, everybody has an opinion. One of the theories is that means inflation is going to stick around. It's much stickier. So they're going to have to push the rates even harder on the Fed Reserve rate. What are you guys thinking about how the economy feels? Does this feel like a strong economy, or does it feel like an inflationary, recessionary economy?
Both.
I mean,
Yeah.
I think for me, at least, and I'll jump in first. For me, whenever I hear somebody say it's not a strong economy, I hear inflation's killing me. Like prices are too high. Because that's, for me, the only thing I can take away from where our economy is not strong. Because the indicators that people like to use, stock market being one, that's just not an indicator of our economy. But January was an all-time high. We're like kind of right in the realm of all-time high, even though in the last month or so, a lot of people had doom and gloom about their 401ks. The stock market's strong, but to me, it's just all about pricing. It's all about inflation, and like that is the lead indicator in people's minds for how the economy is going.
Yeah, I kind of have a little bit of a different opinion. Is there an echo? You guys okay?
No, you're good.
I kind of have a little bit of a different opinion, I guess, just because I'm sitting with a lot of the small business owners kind of on the front line and seeing the effects of all these PPP loans that were forgiven and all the extra cash flow that was dumped into the economy by the SBA with the EIDL loans. Companies were pulling out hundreds of thousands to millions of dollars over the past few years. Some of it was forgiven. And then I think they got accustomed to getting also the personal checks that the government was giving out, and they got used to spending more money that wasn't money they earned. And now that they're having to start repaying these loans and, actually generating income to have the cash flow, they're having a rude awakening. I got to be honest with you. It's not I don't know if all that stuff, it was great. They needed it, but people relied on it and stopped working as hard as they worked in the past to have the income. And I'm not saying everybody, a lot of people used it the right way, but a very large majority of them, there's been some type of loan or forgiveness or amendment they could do to get significant amount of funds if they needed it over the past few years. So I don't know, a lot of people are hoping they're going to bail them out of these EIDL loans, which I don't think is going to happen, but maybe they do. But at some point, those interest only payments are going to turn into principal and interest payments. And that's even going to hurt cash flow even more. So I'm interested to see how that affects, but my first results I've seen over the past few months have not been great for most of the small. I hate to say it, but most small business owners, have faced that issue, this year. So
do you see, Jared? Do you see any of them like for hiring purposes or layoffs? Are you seeing them making decisions about employment, like they're thinking about hiring or laying off? Do you hear any either way? What do you hear about that?
I hear that right now, companies are going to companies are already starting to trim fat, which means they're getting rid of highly unnecessarily employed employees. The higher level employees are getting cut, or other people that maybe weren't keeping busy before, but they had to keep busy for the PPP loans or whatever. And, as far as hiring, I think depending on which business sector, it's a little bit different. But, a lot of the professional services are having trouble finding qualified employees. It's not that there's not a demand for it. It's just that people don't want to work after this whole thing, man. It's, you can bring people in and they really just, they want to get paid, but they're not the same type of workers we were hiring before the recession. So I know we're having a little issue with that. If anybody's got a CPA license and an accounting degree, which seems like there's less and less of them, we're definitely looking. We found some people, but I know a ton of other businesses that are looking as well and having a hard time finding that staff. And it looks like I got a couple people that agree. So, that's just my overall opinion on it. I'm not trying to be negative. I just that's what I've seen. So,
yeah, no, it's not negative. It's reality.
I'm not dealing with monster leaders like GMC or these type of GM or whatever. But it's there's still small businesses, which is what runs our that fuels our economy. So. It's going to have
it's a great way to put your finger on the pulse of the economy, is like talking to small business owners, right? Because that's
100%.
where that's like the lifeblood of our economy, I think.
I
agree.
People don't even understand like something like 70%, or it might only be 60%. I think, but like the great majority of employees work for small businesses. They don't work for the big companies. It's the small businesses that is the backbone of this country, right? Ross, were you going to say something? Were you just raising your hand saying you were having a hard time finding?
I was agreeing with Jarrett.
Yeah, I totally get it. Mike, one last thing, just to talk, continue about the economy a little bit. Are you seeing people call up and asking for refis right now, doing cash out refis because they're looking for extra cash?
or you're not seeing that too much right now?
No, I'm not seeing that too much. Not that the
That's good.
refis aren't happening. Maybe one, like, this is anecdotal, but some of the refi conversations I'm having are for people who are in trouble, right? Like they're trying to find solutions to some sort of income crisis, right? Like, so income is down, they got a lot of equity in the property. How can they access that? Or they've overspent on credit, Johnny's favorite indicator, right? Like, how much credit are people using? And they're thinking about consolidating, like how can they tighten up on the budget? And so, I those types of refinances with the rates where they're at, they're historically, they're not terrible rates. They're, higher than the higher than they used to be still. And so you have to look at that and say, is this really the solution to your problem? So, maybe that's a small indicator too, right? The refi conversations I'm having are the ones who are kind of needing some help and trying to get their equity in order to solve that problem.
Mike, I've had some small business owners. I'm hoping one of them will call in today. I asked him to call in last week, but we ran into some complications with the show last week. But I did. But at the end of the day, some of the small business owners that have been in it for a while that have significant amounts of equity in their house that over COVID their business didn't continue as much as it had in the past. They're looking for avenues to tap into that equity, and they don't have a ton of cash flow. So I'm wondering if something like a reverse mortgage, maybe for these older clients that just really want to, retire and live off, the equity in their house and maybe work part-time or whatever, if that's a solution. And we can talk about that later as well, but something.
Yeah. So I have an interesting piece to interject here, because I think it's extremely important in the conversation with these. And I know we're not talking about all of them, as you noted, with the loans, not all that took it, took it with the wrong process in mind. Many did it the right way. It looks like they're going to be going after some people that did it fraudulently. At least we can hope. But in the scenarios that you're talking about, like Jarrett specifically, are these business owners that are struggling? Is it a downtick in business, like a massive downtick in business, or is it money management the biggest problem?
Johnny, I've had some people that literally were independent contractors. I mean, I hate to say this, but this is the reality of it, man. They were independent contractors that had a corporation set up to do some type of service for others, and therefore they didn't really need the money, and they qualified for these EIDL loans. And we had to let some clients go because of this, because they came into our office this year to have their taxes prepared, and they had basically taken a W-2 job moving forward somewhere, and they had gotten a $250,000 EIDL loan or a $500,000 EIDL loan when they had a closed business, a business that was on the verge of, they knew they were closing. And they pulled the money out of the business, invested it into the stock market, and, are way down now from the timing of when they had put their, now it may be back up a little bit, but either way, I mean, it didn't do anything to help the business. It was for their own personal, satisfaction to make money trading in the market. And that doesn't, help most small businesses or anybody else. So they're going to have trouble repaying those loans because, they're on a W-2 job now, and it's going to amortize at some point. So they're hoping, what I hear from everybody is they're hoping they're going to forgive these EIDL loans. And I don't see that happening. They're personally guaranteed if they're over a certain amount, but for some reason, everybody has gotten accustomed to the government bailing them out, and they're expecting that to happen because they're in a bad situation that they caused, so, I don't feel bad for them, but that's what happens when you throw money out there and you don't have a lot of constraints. And like you're saying, they are looking to prosecute people. And my understanding is, they don't have a great way to do that, but they're going to prosecute the ones that they catch to the fullest extent that the law allows them. And that's kind of like their way of saying, hey, if we, you better get it together. If we catch you, it's game over, but if otherwise they might get away with it, so.
Yeah, I mean, a lot of those loans, I forget what the threshold was, Jarrett, but they were basically, it was kind of like
250, I think.
show us your tax return, and based on that, that's what we're going to calculate for income, and based on your income, you can get a loan of this amount, and it's not secured, right? It's not like secured against your house or any type of property, so it's an unsecured, easy to get loan. Payments have been deferred, right, for 2 years or something like that.
Yeah, it was crazy. It gave you a lever where it basically said, hey, you can get this. You start with 0. How much of a loan do you want? Grab the lever, drag it to wherever you want, up to 500 to $1 million based on your revenue, 500 being the minimum, $1 million to $2 million, depending on your revenue. Yeah. And then they gave us a second chance to do it again. So a lot of people just maxed it out, took all the money. Then you do have to personally guarantee it if it was over 250 or 200, something like that. But they just dragged that bar on over, man, and got 500 grand and did whatever they wanted.
I remember when it was happening, being surprised that
I was like, is this a joke? You just
how easy it was. But I think it was really, really helpful for a lot of businesses, especially who had to close doors for 3 months, right?
100%. It served a great purpose for the right businesses. Yeah, it did save a lot of the businesses. I gotta say, there are businesses that did it the right way and that would not be here if they didn't get that assistance. So
and they're prepared to repay it, right? When the payments start kicking in, they're on a I guess it's probably a 30-year amortization fixed rate loan. It was a really, really attractive loan.
It's interest only for 2 years, and then you don't have to make the payments, and then you can start making them. The interest accrues, and you pay principal and interest after the 2 years.
Nice. Hi, Jim.
Hey guys. We got just a couple minutes before this segment, so I wanted to we're going to switch gears here for just a second, completely shifting gears to a different way. We've been really busy. The Florida Home Pros with Keller Williams Innovations have been super busy the last several weeks, and you've been hearing about all the open houses. I think it was 2 weeks ago we had 3 or 4 open houses going at one time. We had open houses going last week, but we had technical difficulties, so we couldn't talk about it on the air. And let me tell you, open houses, especially in a changing, shifting market like we're in, really make a difference. And all those houses are either under contract, or we're reviewing contracts right now and haven't just decided that we haven't decided to take a contract yet, and we're still marketing the property. And your agent needs to be in this shifting market to be marketing the property constantly. So if you're thinking about selling in this market later, one of the things you should be asking your agent is, what are you going to do to sell my property? Because just putting it on the MLS isn't necessarily going to just get the property sold. Over the last several weeks of the 5 or 6 properties that we put on the market, we've had some houses that were, they're all marketed almost the same way, which is heavily. And some of them are getting 20, 30 showings in the first 4 days still. And some of them are getting 4 showings in 20 days. Now, all of them are either under contract or close to being under contract within 99% of list price or higher. So it doesn't matter in a way whether you're getting 20 offers or just 1 offer, as long as you get the right offer that you need for your property. So just keep that in mind in this changing market. You're not just going to throw it out. It isn't as hot as everybody thinks it is in some ways, although it's not a bad market at all to be a seller right now. So we do have an open house going on today. So I wanted to get Cameron on here. Jimothy, is Cameron on?
He is now, buddy.
Yeah, absolutely. Let's say hi to Cameron, who's joining us out and about with an open house. Cameron, how are you? Welcome. You're on Florida Talk Real Estate.
Good morning, guys. Good morning, Johnny, Jarrett, Ross, Mike, and Jim. How y'all doing this morning?
Hey, good, Cameron.
Great.
Awesome. Cameron, thank you so much for going out to the property today. It's 12332 Temple Boulevard in Loxahatchee, Florida. It's over 1.25 acres. Can you just went out and took a look at the house earlier this week, Cameron? What were your views of the property?
Yeah, so it's the fourth cheapest house in the neighborhood in the acreage. I'd like to start off by saying that it's definitely a great value. So it's a 3.2 2-car garage. It's just under 1,600 square feet under air. You got an upgraded master bath. There's fresh paint inside and outside. You got an oversized living room and dining area. It's sitting on a little over an acre. And you also have a massive driveway for those of you that have those car collections, or you got the RV, boat, and jet ski package. You'd have no problem fitting that. You got tons of room for a pool. You got a brick paver.
It's got a massive what?
What'd you say, Jarrett?
I'm sorry?
I couldn't hear what he said. He has I heard RV and boat storage or something. He's got a massive garage.
If you
Driveway.
have an RV and a boat, or if you have an RV and a boat and jet skis and all that, you got plenty of room to put all that with the size of this driveway.
Nice. Gotcha.
You got new AC and watering softening system. And it's also got a fenced backyard, so that's great if you have dogs or pets. And it also
no
comes with
HOA, right? You said that?
Person sauna.
Yeah,
So
no.
it's pretty cool.
Yeah, no HOA, Jarrett, and it's got a huge big paver brick in the back. It's got 2 fire pits out there, which is pretty cool. And then it has 2 detached sheds on top of the 2-car garage. So it's got 2 detached sheds. These people like their toys, the people that were selling it. And the thing that's interesting about this house was 1992, and the family actually built the house. So this is a one-owner house. They took very, very good condition of the house. It's in great shape. Some of the house looks a little 1992. That's why we have it priced at a great price. We have it priced at $475,000. Now, Mike was nice enough to do a Hometown Heroes flyer on that property. And I want the audience to listen to this, okay? This is a 3-bedroom, 2-bath, 2-car garage home that's in very, very good condition. It isn't like some kind of like fixer-upper, fire sale, okay? Ready to move in at $475,000 if you were using FHA financing, just traditional FHA financing, no catches, right? And you were to use the Hometown Hero program, which is a down payment assistance program for over 50-something professions in the state of Florida. Mike calculated that you would only have to bring about $6,200 to get keys to the house. $6,200, and you're moving into your 3-bedroom, 2-bath, 2-car garage, single-family home with no HOA. And then there's a little asterisk there. Okay, the asterisk is you're going to have to pay for your inspections, which you always do is out of pocket. So if you add the inspections in, you're under $7,000 to do this. One of our good fans has asked us their PMI. There's always PMI on FHA unless you're doing 20% down, Paul. So it's yes, there will be PMI. No, you're shaking your head. No, Mike?
If it's FHA, there's always
that's right.
regardless of the
They
down
changed it. Yeah, they changed it. So it's always PMI if you don't put if you're FHA. But the bottom line is only $6,200 plus inspection costs get you keys to the house on this house. Now, if you're a VA buyer and you qualify for this program, the Hometown Heroes program, guess how much, Jarrett, you would have to put down on the house?
5%.
Out of your pocket.
5,000.
5,000.
5. That's what I
Johnny
meant.
and Ross
Not
are saying
5%.
zero.
5,000.
Mike knows. $0. You don't have to come any money out of pocket except for inspection. That's it. Because the Hometown Heroes will pay for your closing costs and your prepaids.
Wow, that's right. I remember hearing about that. That's awesome.
$0 and you can move into your
you also
3-bedroom, 2-bath home, right? $0 and you move in. If you qualify for a VA loan and you qualify for the Hometown Heroes. Now, the other thing that's great about this Hometown Heroes down payment assistance program is that you don't have any penalties for using it. So you're not going to be charged a higher rate, right, Mike? So if I'm doing FHA and I got a 655 credit score, I'm just making it up, right? And I get whatever my rate is, right, with 3.5% down. If I'm using the Hometown Heroes to help pay those closing costs, do I get a higher interest rate?
No.
No, it just stays. So just like it doesn't exist. You can get up to 5% for the purchase price, up to 25,000. There is income requirements and there's certain professions, but the professions now are getting broader and broader. Mike, what were you going to say?
I was probably going to expand on like when you're talking about the interest rate penalty, that's like, so you're comparing either not using the down payment assistance, right? So basically no hometown heroes, or compared against using down payment assistance that isn't hometown heroes, which basically, anyone can qualify for. There are certain restrictions, but if you use the traditional down payment assistance, Johnny, like much like what you did when you bought your home originally, yeah, you end up with a little bit higher interest rate than you would if you didn't need that assistance, right? But with hometown heroes, they've taken away that string, right? That kind of penalty for using it, and so it's really, really attractive. It does stay attached to the home essentially, right? You do have this second mortgage at 0%. It doesn't have to be repaid except under certain conditions. So it does have that one string, but the other string, which I never liked with the traditional DPA, which is a higher interest rate or penalty because you have that help. So yeah, really, really attractive program, and it's getting a lot of traction, a lot of attention, and rightfully so.
And you got to give us a call. So if you're thinking, hey, I want 5% for down payment assistance for my new home, you got to give us a call. We really understand this program very, very well. We can walk you through it step by step and really help you out. So just think about this. You could buy a house around $500,000 and pay, think about that, $6,200 for FHA financing. That's less for many people. That's less than the average rental rate in South Florida for first last security on a rental.
Sure is.
Right? $6,200 and you're in the door, right? Mike?
Yeah, I was also going to say, you don't have to like this isn't a program for people who don't have any money. Like you could have a big down payment, right? If you want to borrow less money, right? You could do that and get the hometown heroes help as well. So it's it certainly helps if you are tight on cash, which many people are. Of course, it's hard to save up thousands and thousands of dollars, to buy your first home. But yeah, I think that you mentioned if you're a veteran and you qualify, so all veterans qualify as hometown heroes. I think probably the biggest limitation would be the income limits, right? So if you're making over a certain amount, but it's a pretty healthy amount, county based. So
all veterans qualify for hometown heroes, even if they don't have a profession, just the fact that they're a vet.
That's right.
Oh, I didn't know that. I told somebody incorrect information yesterday. Thank you, Mike. Jarrett, what were you going to say? I know you've been asking.
Yeah, I just wanted to know, like, since it's a non-HOA property and the guy that had the place before liked all of his toys, would this potentially be possible for the new owner to buy it and subsidize some of that income with, renting out space to keep a boat there or something for somebody? Or is that not like kosher? Because if he has extra space, then, he could probably keep somebody else, keeping a boat or an RV somewhere these days has gotten so expensive. Is that something that he would be able to, the new buyer would be able to do?
That's a good question for Cameron. So Cameron, you got somebody come to look at the house today and they say, hey, can I turn this into some sort of rental, right? Like a park your trailer, park your boat situation. Is that possible out in the acreage?
Yeah, actually it is. I'm pretty sure it is. And
it absolutely is.
To do that on that property specifically, so that wouldn't be an issue at all. And one thing I wanted to touch on, I'm not sure if Mike had mentioned it, but is this true, Mike? You don't have to pay the hometown heroes back until you sell the property. Is that correct?
No.
Yeah. So it's what I would traditionally call like a silent second. So it's 0%. There's no payments on it. You never have to pay it back unless you sell the home. Right. And we're talking, this is 30 years, right? So once the 30 years is up, if you stay there 30 years, you pay off your first mortgage over the normal 30 years, it goes away. Right. So, but if you sell the house, say 10 years in, you have to pay it back. If you were to refinance, you have to pay it back. If you move out of it, right, if you turn it into an investment property, at that point, it's going to be due. So there is a little bit of, kind of a condition to the help. And the way I would be thinking about it is simply it's equity that you don't have, right? So if you end up needing $15,000 of help from this Hometown Heroes program, just consider your equity position minus 15,000, right? Like that's the way you should be thinking about it. If you need to tap into it for, a home equity loan or something, it's going to be part of that equation. So, but don't let that stop you, because I think that's an easy one to swallow.
So Cameron, what time is the open house going to be today?
I'm going to be doing that from 11 to 2 today. Definitely come by and come by, guys. It's going to be a great opportunity.
12332 Temple Boulevard in Loxahatchee. Go check it out. Awesome opportunity. Go meet Cameron. Go out and take a look at the house. And stop by Cameron and say, hey, I'm interested in that Hometown Heroes down payment assistance program, and let's see if we can help you out. We'll go through the whole process with you from start to finish. So, Cameron, do me a favor, will you?
What's that, Jim?
Sell that house.
Yeah.
Absolutely. Y'all take
Awesome,
it easy.
man.
Have a good day, all right?
Yeah, you
Thank
too,
you.
Cameron. Thank you
Thank
very,
you.
very much. Remember, you can get the details of that open house 11 to 2 with Cameron today. You find it on Florida Talk Real Estate on their Facebook page. You'll find the address, all the details, and give you ample opportunity. It's 9:40, so you got plenty of time to gather up, knock out a few honeydews, whatever you got going on today, and get on out and check out that property. It might be your new home, the one you've been thinking of. Maybe you're like, I'm looking for a place where I could make a bunch of extra side cash, parking people's boats and RVs. And Jarrett just said, boom, we got your spot. We found it for you.
There's
Your
a
dream
huge
is coming
demand
true.
for it. There
You know
really
what's
is.
funny, Jared, is the county, the municipalities, I think they do allow that. So the acreage, Loxahatchee, you can still do stuff like that, but you really need to check the local authorities, which means your better half, and be like, hey, what do you think, honey? Can we store
The
a bunch
local
of boats on the
authorities, I
lot?
like it.
Yeah,
Yeah.
the local authorities need to sign off on
I
that.
like that. That's
I mean, I've been out in the acreage, and I don't know. I mean, people have swamp buggies and all types of crazy stuff in their yard. I don't know how they would know who's whose. So, I don't see it would be a problem, but I don't think most people think of that as being a potential opportunity to make money. And I think there is opportunity to make money with any type of land right now, because I have people calling me all the day, hey, do you know somewhere I can keep my trailer or my boat, or keeping in regular storage like facilities. My boat got, we had everything robbed off it. So, that's probably not one of the best options, so I think this would be a lot better, and they can make some money with it.
Jim,
Well,
can
that's
I
what you
do
get
this?
when you put your boat at my house, Jared.
What's that?
That's what you get when you put your boat at my house.
Yeah. It was just gone every time I went to pick it up, but you said it's still there. So I'm good.
Speaking of that, Jim, am I able to park like 20 tiny homes on my lot and rent those out? Is that something I can do?
I don't think you could do that. That's it has to be zoned properly, right?
Only if they have wheels. Yeah.
Yeah, exactly. Hey, let's switch over. We're not going to take the break, Jimothy. We'll try to take the break at 10. Mike, I want to talk to you about what's going on. Go ahead, Johnny.
Yeah, just real quick. If we're not going to take the break, let me just give you a little reset here. You can be a part of the program if we're talking about something that intrigues you. If you have a question, we got Ross Komarinetz with Brightway Insurance, Juno Beach today. Jarrett Perry, CPA with Player Performance First as well. Lots of ground covered there with Jarrett, and of course Mike Rao, the mortgage guy from the mortgage firm, along with Jim DePola with the Florida Home Pros. Man, we got expertise right here for you to tap into with your questions, comments, concerns. Don't be shy. If it's something we're talking about, jump on board. If it's totally different topic, but it's related, and man, I got access to a Pros Pro right now. Let me get this question in. Don't be shy. 877-927-6969. That's your toll-free number. That's good. Always when Real Radio is live and local. Jimothy will line you up. We'll get you on the air and get you handled. Look, if you're not comfortable on air, totally understand. I'm not either. Go to FloridaTalkRealEstate.com. You'll find the hotline there, 888-973-7828. Reach out. Even send a contact, whatever it takes. You go to Florida Talk Real Estate Facebook page and be like, Jim, I need help. Somebody's going to get in touch with you. There's a bunch of ways to reach out. Make sure you're sharing it, knowing it, using it, and loving it. It's FloridaTalkRealEstate.com. FreddieMac.com.
Thank you, Johnny. I feel like I needed that reset there. I felt like I was going a little off the rails there for a while.
It's all good.
Okay, so Mike, the mortgage rates and everything. Let's talk about that for a second, okay? So the
I wanted
mortgage
to
rates.
talk about insurance.
I'm sorry, we're going to talk about insurance next. We're going to do the mortgage rates, and we're talking about insurance, okay? Because it's two big things going on. They're double whammy here, okay? So with interest rates,
Yes.
we went down. Okay, so last week when we couldn't do the show, we were at 5.3, right? The week before that, we were at 5.54. So we went from 5.54 to 5.3, which is a quarter point drop, right? So what do you think we did this week?
Oh, I know the answer.
I know. So what do you think, Ross? Up or down?
Flat.
Flat. Okay. Well,
remember
I didn't offer that, but that's good. What about you, Jarrett?
I think you said they were down last week. I'm assuming they went back up this week.
Okay.
And
what do you think,
remember,
John?
guys, we had
Down.
we had the Fed come out and increase the short-term lending rate by, what was it, 3/4 of a point, right, John?
3/4 of a point. Only the second time since 1970 or something that's happened, or maybe ever. I don't even know, but it was like a long time ago. If it did happen.
I understand what you're asking. I got you.
And the last time that happened, Mike, I know where you're going with this. So the first time that happened, which was in June, if I'm not mistaken, we went up 0.55 the next week. We went up more than a half a point. I think that's the fastest rate increase in maybe the history of following interest rates in 1 week, because we had 2 times that happened in 2018, and this was more dramatic. So we went up 0.55, but this time when they raised the rates 0.75 again, they did it again, right? Just last week. It went down another quarter point. So we are now at 4.99 for the Freddie Mac rate, which means we're under 5, which is, we're squeaking under 5, but we're under 5. So that, that's where we are. So I thought that was kind of interesting. So the rates, Mike, it's just like I'm saying, they're going up, they're going down, they're going up, they're going down, half point up, quarter point down, quarter point down again.
Yeah.
Goes up another quarter point. A quarter point is a lot in a one way, right, Mike? Because we always say that a full point increase in interest rate reduces your purchase power by 10%. So that means if it goes down a full point, you get 10% more purchase power, right? So every time it goes up and down a quarter, the variance is 2.5% roughly. Right?
On your kind of your buying power. Yes.
So what happens if you're at the upper limit of your buying power and you're at 4.99, and then it goes up to 5.3, and now all of a sudden you're 2.5% short? What happens then? You
can't buy the same priced home, or kind of your max loan amount gets limited. So if the rate goes up, you qualify for a smaller payment. I'm sorry.
Smaller loan.
You qualify for the same payment, but the payment, if the rate goes up, the loan that you can get and result at that payment goes down, right? So you qualify for a smaller loan because the rate increased. And of course, the other side of that is if the rates go down, you're qualifying for a larger loan and you end up with the same payment. And kind of like the perfect situation for buyers is prices leveling off or even coming down and rates coming down, right? Because then you're getting the same house with a smaller mortgage payment, right? Or you can get more house with the same mortgage payment. And that's the question that everyone's trying to ask, Jim. Like what's going to happen with the market, right? Are rates going to continue to go down? They went down almost a half a point, right, over the last 2 weeks. And we're using, just to clarify, we're using Freddie Mac's weekly report. It's a great barometer. Jim has always used that basically to say which direction are things going. It doesn't mean that you're going to be at 4.99. It doesn't mean that you're going to be a quarter of a point less this week than you were last week. But it's a good, it's the trend, and it's a measure, and it's week over week. So,
Mike,
yeah,
I just learned not all loans are necessarily tied. I mean, this is new for me to the federal rates. Some banks.
Well, they're not tied to the federal rates at all. They're tied to, like, there's a thing called LIBOR, LIBOR. Is one of the things. The other thing is the 10-year Treasury bill, Mike. Is that true, or is that just an indicator that it kind of follows the 10-year?
Yeah. So if you watch the 10-year Treasury bond, that is a great indicator of which direction mortgage rates are going. Where you really watch mortgage rates is you watch the mortgage-backed securities or the MBS rates. I mean, that's the true market rates for mortgage-backed securities. But yeah, Jarrett, a lot of people think when the Fed increases their short-term bank-to-bank lending rate, that's automatically going to mean mortgage rates go up. And they are not directly tied. And we have a perfect example. I mean, the Fed raised the short-term bank-to-bank lending rate by 0.75 of a point, and mortgage rates actually went down. And there's definitely reasons that happens, right? It has to do with how attractive are mortgage-backed securities in the investment world, because ultimately they're an investment instrument, right? These are packages of securities. But long term, you can expect that mortgage rates will kind of follow the trend of what the Fed is doing, right? So if the Fed is increasing rates, and we've seen it all year, the mortgage world is also planning for and anticipating rate increases over the long term.
This feels like more of an effort of trying to keep the housing market kind of going a little bit, right? If we keep pushing mortgage rates up as the Fed's doing it, you're just stalling out the housing market considerably. I mean, it's stalled out a lot, but you really hit the brakes on it. But they're able to manipulate it a little bit and keep things kind of chugging along.
Yeah, I wish I had like more insight on who they are, right, Johnny? Like who's actually in control of this. I really think ultimately it's the investment world that is saying, hey, mortgages are performing, mortgage-backed securities perform at, the interest rates. And so that is kind of determined. It's not a commodity, right? But it's kind of like in that world. So are they going to perform? Yes. What interest rate are they going to perform at?
Well, and they're a commodity. In a way, there's a commodity because there is something, right? There's a value, right? I mean, there's a palpable value.
It's essentially, traditionally, with the exception of 2008, it's a guaranteed return. Right. So if you're packaged in a pool that's paying 5%, right?
Which is why it was weird when we had our big blow up, 10 years ago, when they were using the word toxic loans. It's like, well, what do you mean toxic? Like,
without going too deep into it, the guaranteed return on your investment is based on people paying their mortgages, right? So when mortgages start defaulting, all of a sudden those profits and that guaranteed interest is not there, right? As a matter of fact, it's the opposite.
But use your tools to manipulate it, right? Keep the rate where they can afford it. They'll continue to make the payment. If you make it so they can't, they don't. I mean, it's not rocket science, right?
Yeah, I mean, there's definitely some sort of balancing act there, because if home values like tank, that's going to be trouble. Right, because that's a mental kind of switch for people. It's like, wait a second, my home's only worth half of what I paid for it.
Even though the value of your home only really matters when you're looking to buy it or sell it, right? I mean,
we might have a little creep on our discussion here, Jim.
And that's the point. That's one of the things I wanted to bring up, Johnny. I was just meeting with a couple yesterday that are going to be buying a home up in the northern part of Palm Beach County, right? And they're new buyers down here, but they're very seasoned people in real estate, understand real estate, came from another state. In fact, they came from Minnesota, so they really like Florida. They say compared to Minnesota, right? So, but one of the things I explained to them yesterday was when they buy the house that they might actually see the house go down in value over the next 18 months. That might happen, but it's not the end of the world. And the reason why it's not the end of the world, if you're not selling it at that point, like Johnny just brought up, what difference does it make if it's up a little bit or down a little bit? Your loan is locked in. You have a fixed mortgage rate. You have a budget. Everything's on track. As long as you don't need to sell when the market's a little down, it's okay. And we're going to have to go through a correction. We're already seeing the correction now in the changing market. Sales are down in South Florida about 25-30% right now. Okay, sales are down about that much. And it's been like that for several months in a row. We're talking 4 to 6 months in a row. It's been like that. Month after month, we've been down between 20 and 30%. So figure 25% down. So
Jim, it's
that's
the
going to have
age-old
to
question, right? Like, is it a good time to buy?
So I think actually it is getting. I actually feel it's almost a better time to buy now than it was even 3 months ago or 4 months ago, and this is why. It's a little easier. Like I was joking with you guys 2 weeks ago, and it was kind of dead air. It's like in this kind of market, a buyer can go look at 5 houses in one day, go home, and say, you know what? I think I want to think about this for a couple days, decide which one of these I want to put an offer in on. And do I want to put in full price or not full price? And what am I willing to pay for this house? It's a normal market. That's a normal market, guys. Okay. So we're getting more to that. So if you are interested in buying, these rates are fluctuating up and down a lot. But, you know, there's a new thing, a new sell technique that realtors and mortgage brokers are using right now. Have you heard this one, Mike? You marry the house, but you date the rate. Have you heard that saying?
No.
Yeah, that's becoming popular.
You've heard it, Ross. You've heard it. You marry the house, but you date the rate. So the psychological thing, in order to make you want to become a buyer, right,
you can refi
is that, hey, look, yeah, you might be paying a higher interest rate right now, but what do you care? You're buying a house that you love. As long as you can afford the house, buy it. And then later, if the rates change, you could always change the rate, right? You change your rate. So you marry the house, you date the rate. So you kind of hold your nose with the mortgage rate in order to get the house now.
I kind of agree with that in principle, but there's that mentality, and it just like we were all around. We all saw this. People were getting into, and this is a major difference. People were getting into these adjustable rate loans, these teaser rates, the no interest, the interest only payments. And then they're like, yeah, because the value is going to keep going up and you could just refinance. Like when before your payment converts, just refinance it. Yeah. And so that's all predicated upon having sufficient value in the home and equity in the home in order to refinance. So I wouldn't recommend those style of loans still. But yeah, if you get into a fixed rate loan and you're at 5.5% or whatever it is in 2 years or 3 years, and assuming the value is there, rates go back down to 3, 3.5, 4. That's going to be great because refinances are going to be happening all over again.
We're not saying, Jim, you weren't saying to get into like an adjustable arm. You're saying to actually you get into the rate, watch the rates, and then if they get better, you refinance.
Yeah, like so like what I meant is like, thank you, Jarrett, is like you're kind of holding your nose because you're paying, 5.85 or 6.25, which people were paying a few weeks ago, right, Mike?
Yeah, absolutely. Yeah.
Right, they're paying in the 6s, and you're really holding your nose like, oh my God, 6.
Probably still good today, depending on your credit, right?
Right, yeah. So like you're holding your nose, you can afford it. Mike's saying you qualify for the loan, you can afford the payment, you want the house. So you hold your nose, you pay the 6% interest rate. And then later, if the rates drop, like Mike says, to 4%, then maybe it's smart for you to lock in a 4% fixed mortgage, not this ARM stuff. Right. A lot of people are looking at ARMs right now too. But I'm telling you that Hometown Heroes can solve a lot of ARM problems. Most of the time, people are doing ARMs a lot of times in order to reduce the payments, right, Mike? That's what they're trying to do with the ARMs. But they can be a little tricky, but they're not as nasty as they were back in the day. Back in the day, the mortgage companies were like gluttons back in the day, right? The big mortgage companies, right? So they were giving you these teaser loans. Because people don't remember, they were given these crazy teaser loans with super low interest rates, even lower interest rates than the lowest interest rate ever recorded for a 30-year mortgage, right? Which was 2.65 on January 7th, 2021, right? And they were offering lower interest rates than that to get into the mortgage, and then it would go up over time. And those rates weren't real. Everybody was qualifying based on this crazy low rate, but they couldn't afford the real mortgage payment. If they had to qualify for a loan that could afford the real mortgage payment after the teaser rate goes away, a lot of them probably couldn't do that because there were a lot of no doc loans where people were just writing down whatever stupid number. They were sliding the lever, Jarrett. That's what they were doing. They were sliding the lever. So exactly how much money do you make?
Right.
Do you make zero, or do you make $1 billion?
Right,
Slide
right.
the scale. Oh,
Well, I
make
was shocked
$1 billion, yeah.
because I actually was able to get a loan, and it's not. I would have gone to Mike if it was a loan that Mike did, but it was for something else. And they locked me in at 5.29% on a toy, basically. So that I was shocked because I thought because of the rate that was right after they raised the interest rate. So it seemed to be below the new rates, and so I didn't realize that banks, some banks don't, I guess, as rates go up, they don't adjust their rates right away.
Well,
it seems
I mean, you could definitely, like, that Fed hiking the bank-to-bank rate directly does impact like your auto loans, right, or your boat loans or your credit card rates. Like those are the rates that kind of like follow that and are tied to that, because that's what banks
the Feds
borrowing money at. Huh?
You're talking about that's what's tied
The
to the
Fed
federal
Reserve
rates?
rate.
Yeah. So that's what I was surprised, because that's what I ended up getting, and it was lower than the rate. So I guess some banks,
but of course,
don't.
Individual lending institutions have the ability to set their profit, like how much profit do they need to make, right? So they can adjust rates to be competitive on those type of loans, and so they're trimming their profit margins, but they're increasing the amount of money that they've got out there, right? That asset on their balance sheet, the loan. But
So Mike, we got 2 minutes. I really want to take the break so Jimmy doesn't get any more gray hair for the 10 o'clock, so he can get the break in. I want you to give me super quick tips to the public about locking in rates when people, because these rates are bouncing up and down, up and down, up and down.
Okay.
Do you lock in? Do you not lock in? What do you do?
Mike, just the tip.
Okay, just for Jim.
Mike's great at that.
All right, hold on. Now you got my brain all scrambled. Hold on a second. So here is my philosophy, Jim, and I could just because you can't predict it. Nobody can predict it. Lock your loan as soon as you can. That's my tip, right? So talk to your lender, and if you got a lender saying, "Hey, let's wait because maybe next week it's going to go down again," that's very scary prognosticating for somebody in my position. So my advice is to simply lock it in. If it goes down like drastically, you may have some ability to kind of adjust that, right? Like a float down policy, Jim. But in general, lock it in. You're usually on like a 30, 45-day lock, right? That's your typical window. Lock in your loan and don't worry about then stop watching the market.
Yeah, don't look anymore.
You're protected against upward movement, but you're also not able to take advantage of downward movement. But I don't know. I just hate playing that game. So I lock my loans. I advise to lock loans as soon as possible.
Okay. We're going to take the break, and I'm switching gears. Before we talk about capital gains, Jarrett, we're going to do that the last segment. We're going to talk to Ross about insurance because he's been too damn quiet on the show today. So we're going to talk to Ross on the next segment. There's so much to talk about, whether you're in a condo, single family home that's older. Questions. If you got a roof that's older than 15 years, you got to listen to what we're talking about. We've been talking about this for years with Ross. A couple of years we've been talking about changes in insurance and how they're getting more restrictive and the regulations that the insurance companies are using I shouldn't say regulations, or the criteria the insurance company using to decide whether they want to insure or not. And basically, as far as I'm concerned, the state of insurance in Florida is like WTF. That's the state of the insurance in Florida. So we have a lot to talk about, Ross. We're going to get to you next, okay?
And if you have a question, a comment, concern in the world of real estate, specifically when we get into the insurance talk, don't be shy. Dial up. You can do it right now. 877-927-6969. Jimothy will pass out a few Danishes or something, maybe a banana, get you going in the morning. And we have a 4-minute break. It's a quick 4-minute break. We're back at it. The second hour of 2 hours of infotainment every Saturday. Remember, Florida Talk Real Estate is a .com. It's your one-stop real estate shop. Access to the entire team. You'll find it at FloridaTalkRealEstate.com. Pros, y'all. These are the best of the best, and they work together. You can get them all at FloridaTalkRealEstate.com. Find them on Facebook and YouTube as well. Florida Talk Real Estate. Count them up. 4 minutes from now, we're back at it. Great to have you with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Happy Saturday, everyone. I'm meteorologist Zach Covey with CBS 12 News. A beautiful afternoon out there as we deal with mostly sunny and hot conditions. Kind of an abnormal weather pattern for this time of the year. Showers and storms largely inland and west of Lake Okeechobee, so that will keep us abnormally dry throughout the afternoon hours.
This report is sponsored by Wendy's Strawberry Frosty. With a Strawberry Frosty, time to enjoy yourself is built in. They're so rich and creamy, they're built for you to slow down, relax, and just take it all in. So when it's time for Frosty time, and Strawberry Frosty time is for a limited time, choose wisely. Choose Wendy's. Limited time only at participating U.S. Wendy's.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is WZZR FM, West Palm Beach, Real Radio 92.1, powered by the law offices of Anajar and Levine Accident Attorneys. Been in an accident? Call 1-800-747-FREE. That's 1-800-747-3733. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live. at 1-877-927-6969.
I'll say it again for the cheap seats, toll free at 877-927-6969. You make the call, we'll take the call. That's your toll-free way to be a part of the program. I'm your boy, Johnny C. Great to have you with us, whether you're listening on the radio, 92.1 or 101.7. Maybe you're on your free download your iHeartRadio app. Thank you. That makes us worldwide. You can be listening from just about everywhere. And, of course, we go streaming live on a Saturday, 2 hours of infotainment on Facebook, Florida Talk Real Estate on Facebook. Thanks for being with us. And on YouTube as well. That's Florida Talk Real Estate LLC on YouTube. However you're joining us, thank you very much for making us a part of your Saturday and continuing to do just that. I'm your boy, Johnny C. Good morning to Mike Rao, the mortgage guy from the mortgage firm.
Good morning, Johnny C. Thank you. Hi.
And thank you. Good morning to Ross Komarinetz with Brightway Insurance, Juno Beach.
Good morning, Johnny. Good morning, Jim. Good morning, Mike. Good morning, Jarrett. Good morning, everybody. Good morning, Jimothy.
Yeah. Oh, yeah. Jimothy's
Don't forget Jimothy.
Producer extraordinaire right there for sure. Jarrett Perry is with us. He's not muted, so I think he's with us. Good morning, Jarrett. That's Perry Group CPA, and of course, Players Performance First. He's got the PPF on his shirt. We don't see him on the stream, but I believe he's with us. Jarrett, are you with us?
I think he walked away. He doesn't know he doesn't understand the 4-minute thing. It's built into all of us, but he doesn't get that part.
All good. Totally understand. He's with us, and he'll be joining us briefly.
Johnny's got a built-in timer for that for sure. Like he'll walk around, do whatever he's doing, take a phone call, whatever he wants to do. And he just knows instinctively, okay, it's time to come back up, and that's what happens. So
I'm like, it's like having sex twice. You know what I mean?
Let's just remind everybody, Johnny, if you don't mind, about the open house. Is that
absolutely
right?
Yeah. Let me introduce Jimmy D too. By the way, that's the melodious tones of Jim DePolo with the Florida Home Pros team. That's a top producing Keller Williams team. You'll find them with the Keller Williams Innovations team. Florida Home Pros with Jimmy D, Jim DePolo. Yeah, let's talk about the open house today, 11 to 2.
Yeah, we got Cameron Post going out there today from 11 o'clock to 11 a.m. to 2 p.m. He's going to be at 12332 Temple Boulevard in Loxahatchee, Florida, which is west of West Palm Beach. 3-bedroom, 2-bath, 2-car garage, freshly painted inside and out, more than an acre. On a paved road in that area, which is really good. It's got a new AC, brand new water treatment system. House is ready to move in. And if you use the Hometown Heroes program, we talked about this in the first segment, that you can move into that house for roughly $6,200 to $7,000 with FHA financing. With VA financing, you don't have to bring any money to the table except for the inspections on the house. Regular inspections too, not any kind of special inspections. And you can go into that house for virtually no money down except for inspections. And even with conventional, which we didn't mention, Mike, even conventional financing with 5% down payment, you only have to bring like $14,000 and change plus inspections to buy the house with 5% conventional. So please check it out. Robin, one of our big fans of the show, had asked us, how can we find out what professions qualify for Hometown Heroes? You could always just give us a call directly. Just check out Florida Talk Real Estate, give us a call. Or you could go to floridahousing.org. The reason why I'm telling you go to floridahousing.org, that's a safe government website. It's not some kind of sales pitch to get you to call or anything. You can go there, find out the professions there. As you scroll down in the Hometown Heroes, it's saying professions that are eligible to qualify. You click on that, and there's 9 pages describing the professions. There's a 9-page document there for you to check out. So go check that out. If you're on our Facebook page, your YouTube page, we just put the website down on there, so you can go check it out. And if you go to the YouTube page or Facebook page, Florida Talk Real Estate, please like and subscribe to our page and let other people know about us. We're probably one of the best kept real estate secrets out there in a way. So let people know. Okay. Ross, we've got a lot of stuff to talk to you about. So do you mind if we start with the condo stuff first? I don't want to spend too much time on that, but I thought we'd start with the condo stuff and then we'll slide into the abyss. It's kind of like the black hole. and the rim is like the condo thing because that's 3 years from now, but we know it's coming. We're kind of getting sucked in, but we're not there. And then we're going to get closer and closer to the black hole. That's what's going to
I would be calling in today if I wasn't on the show about this because I have my own insurance questions that have arisen in the last few weeks. So.
Well, cool. Okay, so with the condo stuff, okay, because of the collapse of the Champlain, I think it's the Champlain Towers in Sunny Isles. They created a lot more restrictive laws. I think it was a long time coming, and I'm happy that they're here in a way because we don't want another Sunny Isles experience. But this is like big time, big boy, big girl pants kind of stuff going on right now. So any building that's 30 years old or older and it's 3 stories or higher, they must have a test every 10 years. To determine the structural integrity of the building. They also has to have enough money to pay for those yearly tests in the reserves for the condo association. They have to have the money to fix the repairs if repairs are needed. And they also have to have reserves for future repairs. Because state regulations have allowed condo boards to waive that for many, many, many decades. If they have to comply with these regulations now, it's almost like a triple whammy. They got to raise the money for the study. Then they got to find out if there's any structural damage they got to fix now. That's got to be paid for immediately. And then they have to have money in the reserves for future tests and be prepared to pay for future costs. So that triple whammy, there's a lot of people predicting that there's a lot of condo owners that are going to say, I don't want to be a condo owner anymore. And
yeah, because the assessment sticker shock is going to be ridiculous, huh?
Mm-hmm. And then beachside, it's 25 years, not 30 years. So at beachside, it's a little earlier that you have to go through that. So Ross, did I recap that pretty good? I mean, you're the expert. I'm just reading newspapers and articles and stuff. Does it sound pretty right or no?
Well, I mean, that sort of stuff isn't really like so much insurance related. It's more, dealing with the associations and state regulations and what the associations need to do is, for those inspections. And, it's more about how much money, those HOA fees are going to go up, not so much insurance. Now, property insurance rates on condos, have gone up probably 40%, to insure an actual condo building. You're probably seeing those 40% increases on their insurance. And then I know that a lot of those carriers that insure the associations are really, double checking or, being a little bit more accurate with the replacement cost of those buildings and making sure that those buildings are insured correctly. Because like, for instance, my mom's condo association, not only did they have a pretty substantial rate increase on their just policy, but their coverage increased by like 30% as well to make sure it was covered properly.
Was it undercovered, or was this like taking it way beyond where they probably should?
No, it was undercovered. It was undercovered, just like with homeowners insurance. The dwelling coverage is it's arbitrary. I can generate one replacement cost, and an agent can generate a lower one if they want to, and then you can insure the house for lower, theoretically.
Gotcha. Well, I want to make sure I'm understanding what you're saying, Ross. Do condo owners get hit twice for insurance? Is there association coverage that's tied into their HOA, and then they have singular coverage on their unit?
Right. Yeah. So in a condo, the HOA purchases insurance to cover the exterior of the building.
The building. Okay.
So I used to explain it as if you came home and the building tumbled to the ground, I used to explain it that way, thinking it would never happen. But basically, you come home, the building's no longer there. The association has a policy to rebuild that building, and your policy will finish the shell.
So you're like basically the drywall.
So you're insuring the content, the interior of that unit.
So condo owners are getting they're getting reassessed for not only, as Jim noted, like decades worth of kicking the can as far as filling the coffers for the emergency funds. They're also getting a 40% increase on the association coverage. So you're getting this instant big bumps in their HOAs to cover all kinds of things, current fees, future fees, etc. And their personal insurance obviously has probably gone up in the last couple of years, maybe a couple of times. That is hammer time for these folks. Like Jim said, a lot of people are going to be like, I'm not going to be a condo owner anymore.
And then reinsurance is also putting the pressure on the condo associations to make sure that the insurance companies are making sure that the ones that they're insuring are doing the right things with the building structural stuff. Reinsurance is really I haven't heard so much about reinsurance since I used to be a newspaper reporter. People didn't even know. I didn't even know before I became a newspaper reporter that there was such a thing as reinsurance. Who thought that there was insurance companies that their sole existence was to insure insurance companies?
Yeah, most people don't know that, like, citizens, we'll just say, whatever, XYZ insurance company, they're, it's like a bookie. They're laying off their bet, somewhere else.
Yeah, exactly. So, so I'm wondering if there's some deep dark hole. There's a reinsurance company, right? Reinsurance company, right? It just keeps going on infinitum.
I mean, there's different, once you get into like that world, there are different layers of like reinsurance. So
yeah, so they're putting a lot of pressure on the state of Florida on so many different levels, single family homes and that kind of stuff too. But the condo stuff, it's going to be very, very interesting. And let me tell you, the statistics for condos in Florida, there's 1.5 million condos units in Florida, according to this study. I keep seeing the same figure over and over again. So either they're getting it from one place, everybody's getting it from one place, and they're repeating it, or it's really accurate. But, take it for what it is. 1.5 million units in the whole state of Florida. 37% of those are just in Dade and Broward. Okay. And 75 or 73% are 1990 or older than 1990, 75% of them. Right. So what I think is going to happen is this is a great time for developers to come in and reset the button. The people sell, they tear it down, they build up, mega structure that's like built till today's codes, and you get another 40, 50 years out of it. And we might be just going through like a 40, 50 year cycle, and that's what's going to happen. It's just very foreign because like up north, if anybody's lived up north, right? Buildings are forever. Like, 19 buildings in New York City are not that unusual and stuff. You know what I mean? So we just might have to be churning our properties faster, like tearing them down and rebuilding. But anyway, so the condo stuff, very interesting stuff going on there. But none of these regulations are going to kick in until 2025, right? They don't fully kick in until 2025. So everybody's trying to prepare and get ready for that, right? But we have real life stuff happening now. So there's this company called Demotech, who I'd never heard of before, that kind of rates insurance companies. And they came out with a report a couple of weeks ago that said that there were 27 insurance companies in Florida that they were going to downgrade their insurability rating. So I guess an A rating, like normal people, Ross, they say like, I have an A-rated company or a triple A-rated company or something. But really that means, I think the word is extraordinary. What's the unsurpassable? What were the terminology that they used for this stuff? I don't know.
But Demotech
term for exceptional
is the
type of rating, and then there's a lower grade rating, a secondary rating, right?
What's that?
The ratings, right? So they were going to downgrade these 27 companies. And if that happened, because they wouldn't be, quote, A-rated, whatever that real terminology is, mortgage companies require homeowners to have A-rated insurance. So if Demotech reduce the ratings of these 27 companies, about 10,000 people were going to not have the right insurance for their mortgage company. And the mortgage company could do what's called forced place insurance or accelerate the loan and try to file a foreclosure against them unless they switch the insurance company. Correct?
Well, yeah, I mean, yeah, that's up to the mortgage company. Yeah.
So it's Freddie, Fannie, essentially FHA who are making determinations there about the type and level of insurance required if you have a loan, right? And so there are certain requirements, and A rating is, I don't even know. It's not ever been something that I have been particularly concerned or looked into, because it's always like, hey, Ross, what are these companies qualify? He said, yeah, I'm only presenting companies that qualify, right? Only A-rated companies, and that's all that Ross is dealing with typically. I guess these days, Ross, you probably, it's like Citizens, like, as long as they don't downgrade Citizens, we're probably okay, right?
That's it. I mean,
yeah,
95% of the policies that we're writing are going to Citizens every day.
Yeah.
And
but
Citizens,
Jim, to your point, like if you have an insurance carrier now that's not Citizens, and Demotech downgrades their rating to the point where your loan servicer gets wind of it, and they're going to say, hey, wait a second, this insurance is no longer, it does not meet the standard. You got to change, you got to do something. Either get new insurance that does meet the standard, or we're going to do what Jim called the forced place insurance, which is, terribly expensive and does not insure the homeowner at all, right? It's like it's insurance for the loan servicer, the lender.
It may be cheaper now, but there's no coverage for the actual homeowner,
right?
But then you also hear, if you're, in that situation and you don't care, and you're one of those people that that legitimately says, I don't care about insurance and I just want my house, nothing's going to happen, and you feel that way, man, sometimes that forced place might be cheaper just to satisfy your mortgage, but there's no coverage for that actual person.
Just to put this in perspective, the average homeowner's insurance policy for like primary residence in the United States is about $1,500 a year. Ours is, Ross is laughing right now. Ours is $4,300 a year for the average person in Florida. So we're about almost three times the amount of the national average, right? And it's not getting better because companies are folding left and right. They're trying to pull out. The ones that are staying are making it very restrictive. So here's the new thing. Florida passed a regulation saying, tell me if I'm right about this regulation, saying that insurance companies can't just cancel a homeowner's policy or reject a homeowner's policy because the roof is more than 15 years. They're not allowed to do that as long as the homeowner can show that the roof has 5 years useful life.
I've got a perfect.
So now what's happening in the news articles I'm reading across the states, what's happening right now is, so insurance companies saying, okay, well, if your roof is over 15 years, we want a double layer of water resistance underneath the shingle or the top layer thing. And of course, if your roof is over 15 years and you don't have that, there's no way to make that happen. So either you had the double layer back then or you didn't. Probably you didn't, because most people wouldn't.
Can't you just put
therefore, they're using that as the out to get out of the insurance.
But that's only for new business. That's on their new business policies.
Oh, only new business. So
that's on their new business policy.
So if I had a roof that was 17 years, but I had 8 years life of useful life, the next year they'd have to take me, right?
That particular carrier, they couldn't cancel you for that reason.
Yeah. So now they're trying to figure out like construction things and other things, this age of the house itself. They'll say, I don't want to insure a house that Ross has been saying this for over 18 months, I think, or longer. Companies are saying if your house is older than 10 years old, we don't want the policy, right?
Well, I mean, all the companies have, all the companies have different guidelines.
Right.
But a lot of them are going to that. Oh, if we're gonna provide insurance, well, that house better be brand new. I got one carrier right now that is only accepting 2022 builds.
Yeah. So it's just less and less.
It's
I
simple.
think I have a
It's
really
simple.
good example of this. Like in general, like I got a letter, Ross, saying that, you know, they wanted us to have a 4-point inspection and a wind mitigation and all this stuff. I have a metal roof. It was built in 1998, no leaks or anything like that. And so we paid for the 4-point inspection. We get a letter back from the insurance carrier saying that, hey, you know, we noticed that on your metal roof, there was some rust at the what is it, Jim? The joists or whatever, I guess, where the two pieces of metal come together. Certain parts,
valleys,
the corners of the roof, right? And so basically, like, you know, where the skylighting things are and things like that. So anyway, they basically told me that I need to get a letter from after the inspection, which came up with no issues. They told me that they noticed that there was rust. I got a letter saying they noticed that there was some rust on certain parts of the roof, and they wanted a letter from a roof contractor stating that there is no active leaks in the roof, which I thought the 4-point inspection addressed. So I was a little.
It should have, because that's all that a roof certification is that page of the 4-point inspection. So.
And that's what we responded with, and they said we still want a letter from a roofing contractor. And so I've had 2 contractors come out and give me, you know, a quote on a new roof, which, you know, they're like, there's no reason to do that. You still have at least 10 years. There's no leaks, but none of them want to sign a letter stating that there's no leaks, you know, for whatever it is they charge for a letter. Like, it's not worth the liability, I guess, for them, you know, to even put it on letterhead and state that, you know. And I'm like, I'll pay you guys whatever, but otherwise I'm going to get, you know, I guess, can they drop me? Like, if I can't get a letter from a roofer to sign and I had the inspection that shows that there's no leaks, I mean, obviously they're just trying to squeeze people out. I mean, that's the only reason they would do that. So, you know, I mean, there's no other, I don't know what my options would be.
I don't know that the 4th page should be sufficient.
4th page? Oh, the 4th page.
Like just
I was like, oh, the 4th. Got you.
What you should do, Jarrett, next time on whatever future home, if you see any rust, just put some spray paint on it before your inspector's out there. That way, you can't see it in the pictures.
I knew we didn't have leaks, and I thought I'm going to paint it anyways. It was like they needed it right then. Hindsight's 2020, Mike. I got you.
You want to take the phone call, Jimmy D, or you got another question as we kind of roll through this insurance situation?
Let's take the caller.
877-927-6969, toll free. Todd is joining us with an insurance question. Hello, Todd, and welcome. You're on Florida Talk Real Estate.
Hey, Todd.
Hey, guys. Have a little bit of insurance experience. What happened to every carrier had to take on risk, or in a riskier state like Florida for hurricane versus a non-risk state like Ohio for the major fault line versus the, you know what I mean? How come we're getting squeezed out by these major insurance companies?
So, I mean, these are all private companies. They can do whatever they want. It's up, you know, they set their guidelines that are, hey, if we're going to offer coverage, this is what it is. I mean, the biggest issue, what's kind of driving all of this is fraudulent roof claims. And the companies are going, look, we're having all of the influx of roof claims, and we're having to replace roofs that aren't necessarily damaged, or have they just been baking in the sun for 18 years? So what they're saying is, we're being sued all the time to go to court to replace a roof. So we don't want to argue whether or not there was real damage or that roof has been in the sun for 18 years. So you know what? We're not going to insure roofs over X amount of years, you know? And
I always thought there was a above the Re's, above the re-Re's, insurance companies, that everybody had to take on a little piece of the pie in the riskier area.
What do you
Is
mean?
that not true?
To be honest with you, Todd, I think I remember that reading about that too many, many, many years ago when we were having same type of insurance problems, but like this is probably 15 years ago or so. In order to have the company, they basically were telling companies, hey, if you want to make money off of car insurance and other types of insurance, boat insurance, that kind of stuff, and you want to come down here and sell that, well, then you're going to have to, and you want to bundle it with home insurance, well, you're going to have, you can't just cherry pick. You have to take a certain percent of risky properties. I think that's what I remember. Todd, is that what you're thinking about?
Yeah, exactly. But I thought it was a federal. I did commercial P&C for a while, all across the country. So like if you had California properties, you had to take on something, and balance it off with Nebraska. And if you had Nebraska, you had to balance it off and take in Florida or Texas.
Oh, they're spreading the risk.
Oh,
Hurricane.
okay. I wasn't aware about the interstate stuff. I remember reading about this back then, where the state legislators were trying to get the insurance companies to insure more stuff so they can dump more citizen stuff. But yeah, I don't know what's going on with that either, Todd. I don't know the answer to that.
No, I mean, most of the companies that write in Florida only write in Florida.
Right.
Mm-hmm.
Go ahead. What's that, Todd? Go ahead. Start over, please.
Take on that risk. It's the balance another risk.
I'm sorry, buddy. We didn't hear a word you just said. Can you start over from the beginning?
Oh, I'm sorry. No, I knew guys that worked at DRE, and they're like, oh yeah, they're making us take on a risk in a higher risk area because we're too concentrated in a lower risk area.
Mm-hmm.
It was more about fair market play.
Gotcha. Yeah, I wish, when you start getting into that world, brother, you start dealing in the socialism type realm, and you start scaring the hell out of people. So it's a private business. These are private companies, and they will do as they please, unfortunately, for many in the state of Florida right now.
I think Florida's a little different, like Ross was saying. It's Florida's, you're pretty much stuck with one or two carriers.
What my big question is, why are insurance companies paying for roofs when we haven't had a freaking hurricane anywhere in the state of Florida for like 5 years? Why is this even an issue?
Well, they'll talk about, we had a meteorologically present hailstorm.
Come on.
That came through the area. Dude, so I had somebody 3 days ago email me and say, hey, Ross, what's my roof deductible? And so I emailed her back and said, hey, depending on what the damage is as a result of, here's what your two deductibles are.
Hailstorm's the highest.
Why? Did something happen? She emailed me back, somebody stopped by and offered a free inspection on my house, and they found damage, and they said they work with the insurance companies, and they were going to get me a new roof. And I emailed her back. I'm like, they don't work with insurance companies. They work with attorneys to sue the insurance company. And that's the whole problem with what's going on right now,
And we've had a multi-year run where people would knock on doors. You'd be getting things in the mail. You'd even be getting your favorite radio stations. This one right here. You'd hear commercials all the time about how this very thing can happen. Let's find out if you had damage to your roof, and let's see if we can get it paid for by your insurance company. People were like, yeah, sweet, let's do it. They didn't quite see the forest through or the trees through the forest. Saw how this was going to affect everybody. And it is massively right now. Massively.
Yeah. So did we say goodbye to Todd yet, or is he still on hold?
He's here.
He's here?
Yeah.
I'm sorry, Todd. Yeah. Did you have any other questions or anything?
Take the village, man. Everybody's got to do the right thing.
Yeah, absolutely.
Todd, we thank you very much for your patience. Thanks for being with us, brother. You always remember FloridaTalkRealEstate.com if you need us in the future. Nice talking with you. I hope you have a great rest of your weekend, my friend.
I feel like there should be a way to report, like if you know, like there's a whole bunch of fraudulent activity in your neighborhood and new roofs going up. Like I'm not into just like doing that stuff, but now that it's starting to affect me and everybody else, like there's no way to kind of.
Right now it's legal. It's legal to do it. It's legal. You know,
Yeah,
and that's
I think
why
with the adjusters coming in.
If you're going to allow this to happen, we're not going to insure roofs that are older than this. So,
got it.
You know,
yeah, things got to be straightened up. Next time, Ross, we're not going to do it right now because I want to get into capital gains before we close out the show. Next time, we're going to talk about how the state of Florida now is talking about becoming the reinsurance company to keep some of these companies in the game down here, which to me sounds a little scary. Maybe it is as scary as I think, but we're going to talk about that next time you hear us about that. But I want to switch over to gears about
sounds like the makings of a good old boys club is what it sounds like.
Well, I wanted to go into what we were going to talk about last week with Jarrett, which I thought was really good, but which is when you're selling an investment property, what is the difference in how you handle your capital gains or the taxes that you pay for owning that property and selling it for a profit? But what I want to do first, though, is I had a customer, Jason, who asked these questions. Now I'm reading it, okay? I'm reading it right now live because I haven't read these questions, okay? He says, hi, this is Jason from Georgia. My question is, if you live in Georgia and sell a house in Florida that you owned less than a year, what's the capital gains tax I will have to pay? Thanks for the info. Now, he gave me a figure of what he thinks he's going to net on the property. Let's just say, I'm not going to give the real figure, but it's close. $200,000 is what the check will be when he closes. Okay. So a couple things you need to know that he didn't mention. Okay. The reason why he owns this property less than a year is that there was an estate because his father passed, and he owns the property after going through the estate stuff.
As an inherited property.
Inherited property.
Okay. And he wants to know the overall tax ramifications and what type of rate he would be looking at.
Yeah, and he's going to be closing soon, so he's pretty serious about this, and he would like to get a consultation with you guys afterwards because he'd like somebody to handle this for him.
No problem.
Okay.
I think I can give him an answer. That's basically with an inherited property, you have a different situation because, what's supposed to happen is, if it's not inherited, the gain has nothing to do with the net proceeds that you're getting. And a lot of people get confused on that. So let's throw out those net proceeds because that has to do with if you took money out and refinance and did cash out and that doesn't mean that it's a gain or a loss or anything like that. So, at the end of the day, what you're calculating your gain or loss on is your purchase price of what you paid for the property, plus any improvements you've done to the property, plus any closing cost. Now that's what you call your cost basis in the property. Whatever you sell it, less that cost is your gain. And the holding period dictates whether or not it's taxed, like short-term less than a year, long-term over a year. Short-term means it's taxed as ordinary income at the marginal rate that you would be at on your taxes. So I can't give anybody a rate because I'd have to see their taxes to be able to say, hey, this is what rate you're in with that gain from the property. There's a very big benefit to holding it over a year. You end up with a long-term capital gain, which even has rates that start at 0%. So if you had no other income, part of that gain on a long-term capital gain can be taxed at 0%. meaning you'd have no tax on the sale up to a certain portion. And then the top rate is, I think it's 22% for long-term capital gains, or 20%. Most pay it at about 15 on a long-term capital gain at median income levels. Go ahead, Mike.
Just a quick question about the marginal tax rate. Is that calculated before the gain? So just say whatever your marginal tax rate is 28%, you don't throw in the gain, and that kicks you into like a 32% bracket or something.
Well, it does. Your tax rates are based on your overall income. So
the gain is part of that.
Yeah.
Okay.
And then they break it down based on how much of that is ordinary and how much of it's capital.
Okay.
My question is,
I know your question. To get back to it, right? The one about the state, or you have something else, Jim?
no, cost basis. Okay. So for the cost basis for this guy, Jason, he didn't pay anything.
I know. He's
okay.
Yeah.
Okay.
So I just wanted to explain the basics. And so his name's Jason.
Mm-hmm.
Yeah. For Jason, there's a difference between receiving a property as a gift or inheriting a property. So when you get a property as a gift, you would get the gifter's basis in the property. When you inherit a property as a result of somebody's death and its passing as an inherited property, you get a step up in cost basis. So like, even if you paid, nothing for the property, you get a step up. When I say step up, your basis becomes the fair market value at the date of death. Or you can use an alternate valuation 6 months after the date of death. So my point with that is, typically, especially when you have closing costs on the sale, you shouldn't really have any tax implications, because for a 6-month appreciation less the closing cost, you would have to have some serious appreciation to end up with a gain on the sale.
And in the wild market we've been in the last couple of years, do you think there's a chance that he had a substantial 6-month appreciation that might hit him?
This gentleman,
I do. But like at the end of the, go ahead, Mike. Jim, go ahead.
This guy would definitely not, Johnny, because of the condition of the home. It was in very, very poor condition. I could see if it was a nicer home, like a more modern, newer home. This house couldn't qualify for any type of financing.
But even with the larger properties, Johnny, it's a matter of, how are you valuing the home? Like, are we using property appraiser values on the property? You're supposed to use the selling price, right? But, if the IRS came back, they would have to do some type of historical appraisal to show that it really appreciated that much from that time. And I think that's difficult to argue for them. Especially when you have the closing costs thrown in there.
So logically, if your cost basis is calculated based on market value, and you assume you're selling it at market value, there's no gain.
No gain.
Like, and
Prior
IRS
loss.
is, yeah.
For the closing costs. Yeah.
That might make Jason. That might make Jason.
Now let's ask this, Jarrett. Does he need to have somebody who knows what they're doing prepare those taxes? Like, do you have to report this in a specific way, or are you just like, hey, I didn't have a gain, therefore I don't have to do anything?
No, you have to report it. I mean, it's not his primary. He should get a 1099 for the sales price. So somebody's going to have to, if he goes to somebody that, maybe isn't as educated on the matter, like some walk-in place, or just somebody that is versed in real estate, they may ask him, what his dad or whoever passed the property paid for it, to get his basis and use that. So, and I've seen that happen a ton of times. So yeah, it does matter. I mean, whoever's preparing it has to understand that, the inherited property rules and how the basis works on property that's been inherited as opposed to gifted. And a lot of people make mistakes gifting property out of their estate before they die, and they're creating tax by doing that instead of maybe putting it in a trust or something where it can pass in the same way. You know what I mean? And that's really where people run into major problems, is with that type of stuff. So
Johnny, what's the lesson there?
What's
Leave it
I
to
don't
the
know
pros.
what the lesson is, Mike. Help me out with that one.
You got to leave it to the pros. You got to be working with the pros. Pros. You have to.
I'm trying to think from the other side. I'm like, there's got to be a lesson that I'm missing right there. There's like some shady aspect of it. No, absolutely. And I've preached it like as long as I've been on the radio here with Real Radio. The reality is, if you have the opportunity to go to people that are great at what they do, you need to jump at that. FloridaTalkRealEstate is .com. Go to the Pros, your one-stop real estate shop. Reach pros like Jarrett Perry and Ross Komarinetz and Mike Rauch, Jim DePola. Find them all at FloridaTalkRealEstate.com.
If you ever have a property that you wanted to, pass to your kids or whatever, and it's just the asset, like at the end of the day, but you want to, use that property to sell and buy more properties, and then sell those properties and buy more properties, and doing it through like-kind exchanges, which we can talk about another time. But so people understand, you could defer the gain on all those sales if you reinvest all the proceeds. So if you started out with $100,000 property, flipped it into a $300,000 property, did a like-kind exchange and bought, reinvested that money to buy new properties, as long as you don't sell that and not do a 1031, it'll be included in your estate and get a step up so that no tax is ever paid on any of those gains. Because your kids will inherit it at the fair market value. That's a major tax planning technique that we use for people that are flipping properties and doing things like that. And there is a big difference, Jim, between flipping and selling an investment property.
Yeah, so let's talk about that. We got about 10 minutes, okay?
I can make it quick, yeah.
Okay, so let's say because this is what I used to do way back in the day. So we're going to use me as a real life example on this thing, and then we're going to talk about the other thing that I only did a little bit. So I used to do a lot of fix and flips, right? So what does that mean? I would buy the house undervalued because of the repairs I needed to put into it. I would put the repairs into it, and then I would resell it as fast as I could for the fair market value after repaired value. That's fix and flip, right? So when I would do that, I usually own the house for less than a year. Okay. So let's say I'll kind of use one that's kind of a real life one, right? So I bought a house for 60, I put 100 into it, right? And then I ended up selling it for $325,000, right? And I netted, let's say, after all the smoke cleared, my closing costs, commissions paid, back end.
You netted it, or your base?
No, I netted, let's just say, just to make it easy, a flat 100. That's after all the smoke clears, I sold it, I made $100,000.
Gain, not netted, like your gain, right?
After you back out all my costs, I had $100,000 left over.
Got it.
Okay. All the costs, everything.
Yep.
Right. Yep. So then I have $100,000. I sold it in 6 months.
That it? Okay.
Yep.
Yeah. So even if you sold it in it took you 2 years to do that. There's a difference between you adding the value to the property and the property being a result of appreciation. So that's really what dictates whether or not it's a capital gain or it's ordinary income.
Well, during that time when I sold that house, to be honest with you, during that year, I saw appreciation, like tremendous appreciation on that house, like that value. When I first bought the house, I thought I was going to sell it for $225. Okay. Yeah. But I ended up selling it for $325, and that extra 100 really was appreciation.
Yeah, and there's ways to structure it where like you can capture the appreciation separately, but it would have to be like, you're holding, land, and then when you start developing it and you sell it to another to another entity in that way, and that's the appreciation. But to keep it simple, your example, if you didn't do all that stuff, it's still ordinary income because of the fact you're in the business of flipping properties and you're not in the business of holding it for an investment. And the majority of the gain is coming from your services.
So I'm not really paying capital gains. I'm paying ordinary income on the profit I made from that property. Plus my other income that I make. Add the two together. That puts me in a certain tax bracket. I pay that, right?
Yeah. And a lot of people think that if they hold that property the year, they're going to get that capital gain break. And that's not necessarily the case because you're flipping a property. In a flip, the property is considered inventory, right? Like you buy inventory, your costs go into inventory. And it's like making a widget, whatever you want to do, and then you sell it, right? That's exactly what we're talking about. You know, other prices fluctuate with other things that people buy and sell. But that has other parts that go into it that make it more valuable.
So now let's say there was a time a long time ago, I bought a property. I turned it into a rental property, right? I kept it for, let's say, 3 years. Okay. I kept it a short period of time for most rentals, right? I kept it 3 years. And then I was going to sell it. And I decided I'm not going to do a 1031 exchange. Okay.
Yep.
Which means I'm not deferring the taxes. I just want to know what my tax hit would be on that. So let's say that like, how do you calculate what profit I made and what losses I could take off of that property?
So
like basic 101 stuff.
Yeah. To keep it super simple, let's talk about investment and then we can talk about rental real quick. Cause rental gets a little more complex. So if it was just an investment property that you held, you could do some improvements to it, but your gist is you're holding it as an investment for appreciation. Then, it's the 1 year, anything over a year. So under 1 year, ordinary income, anything over a year is capital gain. But when it's a rental, you throw some wrinkles in there because you were depreciating the property to offset the rental income. So you got an ordinary deduction for that depreciation expense. So what the government doesn't want to have happen is they don't want you to get an ordinary expense at a 30% tax rate and then get a favorable rate on the sale at 15%. So when you have depreciation, there's this concept called recapture, and basically what that means is I think it's 25%. You have to pay a flat rate. So if your gain's 200,000, 50 of it is prior depreciation. That 50,000 is taxed differently than the remaining 150. That 50,000 gets hit at an average rate of I think it's 25% because you got an ordinary deduction for it. Right. So they want you to pick it up at an ordinary rate, not a preferred rate. The rest of it would be your typical capital gain, whether it's, a year or 2 years would dictate.
Is it 15% now?
Well, that's the what most people would end up paying, like average income, levels on a long-term capital gain, but it can be 20%. It could be 0%.
I'm glad you kept that simple, Jarrett. Ross, can you just summarize what he just said?
Yeah, sometimes if it gets taxed at ordinary income, and then sometimes it gets taxed as a capital gain.
And then explain recapture again real quick.
It's definitely, and it's different. It's a whole other animal when it's a rental property, when you've been receiving rent.
Yeah, so basically rental properties are typically capital gain, and then there's an adjustment for the depreciation. And
so I think the one thing I got out of that was that when you're in the business of flipping homes, it's never a capital gain, right? Very rarely a capital gain. It's just taxable income.
Yeah, unless you're like sitting on land that you're trying to develop or to do something with, and that's appreciating, right? Then before you develop it, you can sell it if you do things right to another company and take advantage of the capital gain.
And
when you
pushing
start
pushing
building
the
on it.
Yeah. Okay. Yeah.
You understand? Yeah.
Interesting.
So there's techniques. It requires planning and being proactive. But the gist of it is, for most people, primary residence, you get an exclusion on the sale, and it's not fully taxable if you've held it for more than a 2-year period. If it's investment, it's capital gain. And if you hold it over a year as property, you get a preferred rate that's going to be less than 20%. Flips are taxed at ordinary income.
That's good stuff.
We only got a couple of minutes left, I think. So I wanted, there's so many people that right now. Thank you, Jarrett.
I tried my best to make it as simple as I could, man. It's not. Taxes aren't the simplest.
The bottom line is I always believe that you have to have a really good CPA as part of if you own a business, you have to have a CPA that's good, so that when you're doing stuff, and Jarrett's awesome. So if you have any questions about capital gains on something you're selling, the first thing you should say, if you didn't understand anything Jarrett said, it was pretty good for accountanese.
Right.
But the bottom line, what he said is, if you didn't understand, call Jarrett Perry CPA Group. They'll help you out and figure out what's the best way to handle your taxes to save the most money, but without getting orange jumpsuit and living on the Fed at Club Fed for a while, right? You don't want to
try to do it before you sell, so I can help you. Because there are some techniques we can use, whether it was a rental or wasn't a rental. Maybe we could make it a rental. Maybe qualify it as a rental. There's a lot of techniques in there that we can help with. But
or maybe you say hold on to it for a little bit longer, and you have a different result.
Yeah, maybe I say put a article in Craigslist because you're selling it at a loss, that you're trying to rent it, so we can show it as that you're trying to rent it as a rental and for 1 year, and then the next year you sell it at a loss. Now you can take that full loss against your other income. Whereas if it was a capital loss and you didn't do that, you wouldn't be able to. So there's a lot of techniques that can be used.
So a little prior planning, the 6P rule, as we might say. A little prior planning can go a long way.
That's right.
Let the pros do the planning with you. See what works best for you and your family, your future, regardless of what you're trying to do. Let's have the pros get involved. And it's free to find out some valuable information. Get connected to this team. It's your one-stop real estate shop. It's FloridaTalkRealEstate.com. You'll find the hotline there. It's answered 24 hours a day, 7 days a week. 888-973-7828. Again, 888-973-7828. You'll find it at FloridaTalkRealEstate.com. Remember, not only FloridaTalkRealEstate.com, but on Facebook, Florida Talk Real Estate, and on YouTube as well. Ton of informational, really content-filled videos for you to consume. Good information for you to arm yourself with. That's Florida Talk Real Estate LLC on YouTube. But the .com, that's the most important part. Your one-stop real estate shop. Know it, use it, love it, share it. You can change lives by putting people on to FloridaTalkRealEstate.com. Mike Rauch, my friend, I hope you have a great remainder of your weekend.
Yep, you too. Thank you, Johnny. Thank you, everybody.
As always, thank you very much. Jarrett Perry, have a great rest of your weekend as well, my friend. Nice to see you.
You too, buddy. It's good to see you as well. Good to see all you guys. Hope you have a good weekend.
Please do the same. Have yourself a phenomenal rest of your weekend, and happy belated to your little one.
Thank you. Hope everybody has a great weekend. So far, it looks all right out there right now.
I think we'll be able to make the most of it. Yeah, for sure.
I might do a little paddleboard, and I heard you had a nice one, Ross. So I'll talk to you about that some other time. I may want to go with you.
Jimmy D, Jim DePola, have a great weekend, my friend.
Ross Jarrett isn't going to go paddleboarding. He's going to go on his paddleboard, throw out some bait, and let the fish paddle form the lazy you-know-what.
Right.
There's a few ways to do it,
Hopefully that is the case.
I hope so, too. Tight lines.
Fun. It absolutely sounds fun. And I hope you're sticking around. We got 4 hours for you coming up next. The Locker Room, Greek, Joe, and Jimothy, they'll take you from here. We're back at it next Saturday. 2 hours of infotainment every Saturday, 9 till 11. It's right here on Real Radio.